All right, hello everyone, and welcome to another Wall Street for Main Street podcast. Today we'll be featuring the head research editor of KC Research, and in my opinion, one of the best energy analysts in the world, if not the best, Marin Katusa. Marin Katusa, welcome to our podcast.
Thank you very much.
All right, first thing I wanted to get into is what everyone asks is when you think of energy, you always think of oil. Where do you see oil prices going this year?
You know, you always have to hedge yourself saying that, if a conflict in the Middle East does happen, it's off to the races. And if anything happens in the Strait there, you'll see north of $145, north of $150 per barrel. But, given that it will be sustainable in the Middle East, I think you'll see a trading range bound between 85 to 95 for most of 2013.
So you don't see prices rising really that much. It's more like a long-term thing?
This year, I look at the success of what the North American markets had with the unconventional technologies, a cooling down of the global markets, and for 2013, $90 oil for WTI still is a fantastic price for some of the producers.
All right, great. I actually think, Shell Oil has prevented any type of spike or anything, and it actually got the IEA excited about the U.S. energy independence. Is that a myth or a reality?
Well, I think just like any, bureaucratic institution, whether it's government or not, they are correct in their assumptions, but their timing is a little bit off. And if you look at, if you go back to the historical EIE reports, they are wrong a lot. They were just, 10, 12 years ago talking about how America would have to build their imports of LNG infrastructure. So when you read these big reports, take them with a grain of salt. Decline rates are larger than most people think they are. The cost of production are significant, and it has been a fantastic success in the U.S., but still the refining capacity, these are all issues that still need to be resolved. So I agree in the future of what they're saying, but I think their time frame is a little bit ambitious.
All right, so that's interesting thoughts. And I was wondering, most recently there's been news, this caused a little price upwards in Saudi Arabia cutting production. I personally thought 10 million barrels just wasn't sustainable. I thought it was, 8 or 9 is more realistic for the foreseeable future. I was wondering, what was your thoughts on why they cut production?
Sure, because of the demand. You see, historically, Saudi Arabia is a swing producer, and as a good ally of the Americans, they can flick the switch on to go over 10 million barrels or sustain it back down to 8.5. It all depends on what the market requires. And they're of the OPEC nations, they're the friendly swing producer. And if you look at what now Putin and the Russians are doing, most people, when they think who's the largest producer in the world, most people will just automatically assume it's Saudi Arabia. People must remember that the Russians have been shooting for that first spot, and they've had it, and last year they were also. So it's an important thing to look at, but it's a global situation where they saw that the demand was decreasing a little bit, so they churned down the taps a bit.
Oh, okay, yeah, I definitely concur with that. And not only that, Saudi Arabia was at least from my research, the swing producer that made the USSR go bankrupt. What do you think? Do you agree with that, or?
Well, it depends which stats you want to use, and there's a lot of evidence that would agree with what you're saying.
Oh, okay. And my next question I just wanted to bring up was China buying up assets in Nexen. Mm-hmm. What do you think? Is this a rapidly expanding trend, or is this just a one-time event? No,
it is an absolutely expanding trend. Last year I wrote about it in our forecast issue about the big trend. So from 2007 to 2011, China spent $75 billion on oil acquisitions. Okay, in 2012 they spent a little over $20 billion. So they spent last year 25% of what they spent in the 5 prior years. that is showing significant acceleration, and the race is on. You have the Indians spending billions to buy into the cash again. There's a blank check policy for these national oil companies to get rid of their depreciating U.S. dollars and to buy tangible oil-producing assets. And this is a trend that will continue.
Yeah, I agree. I think India definitely, after that blackout, this is just my opinion, but they're going to try to do everything they can to prevent it from happening again, and that means acquiring more assets. So
correct.
I thought it was interesting you brought up India. So, and I actually wanted to switch subjects to natural gas. And I want to bring up the new, I call it propaganda, but it's a Matt Damon movie about fracking and how it lights the drinking water on fire, and they probably say it causes cancer. I've heard that before. You wrote an article about it. Can you explain to our audience about what you thought?
Sure. The article's free on our website at kcresearch.com. It's in the Tuesday Daily Dispatch, and we basically, look, I went through when Gaslands came out, and I went through the movie and said this was correct, this wasn't correct, and I kind of corrected them for the movie. They actually contacted me. They're doing a part 2 in it. They wanted me to come in and do some, as the energy expert in the industry, to come on. And, some of these questions are just entertainment. That's what people have to understand. So Matt Damon's, the broken promise is what we call it. Again, he's using these myths to scare people to bring them into the movie theaters. Now, when people talk about, lighting your faucet, that's naturally occurring methane. And the irony of all this is these farmers who are being scared into this, they're actually putting more poison into their ground themselves with the fertilizers they're using than these gas companies are. And, if you look at the science, the facts, the aquifers, they have not been, there's been nothing proven yet. But that said, the CBM, the coal bed methane, went through this about 10, 12 years ago. And shale technology, if you want to use, fracking, is about 5 to 6 times deeper than CBM. So if CBM was cleared by the IEA, shale will also. More importantly is where the issues have come and they're being fixed is, where they would use line pits because the shale industry uses so much water to frack, anywhere between 2 to 5 million gallons per frack. They were using poorly lined pits, 6-7 years ago. That's in the past. Moving forward, you have companies like Poseidon who have these modern technologies to use it and to recycle the water also. So a lot of these facts were used and manipulated, and the irony when they talk about the casings in these, the wellbore jobs, this is much better than what was done 50 or 60 or 70 years ago in the sector, and, it's just fear-mongering.
All right, and I definitely agree with that. And it seems like the United Kingdom, they just actually lifted a ban on fracking. So it seems like the United Kingdom isn't buying into the fear-mongering, at least from my point of view. What do you think?
Well, to give you a little bit of color on that, I was actually, the company that is in the limelight, that's in the Economist and the Time magazine, and then, all of the big magazines in the UK is a company called Quadrilla. And they have made a 200 TCF onshore discovery, and the UK government calls this a national treasure. And over the last decade, the UK, the Germans, most of the Europeans have actually been increasing their dependence of not just natural gas, but all natural resources from the Russians. Believe it or not, the UK gets about a third of the natural gas from the Russians. The Germans over 55%. You look at Finland, 100%. When you look at Poland and the Ukraine, these economies are strangleholded by the Russians. So now a company named Quadrilla came in, developed a world-class, onshore discovery right in the backyard of the UK. To put it in perspective, this would be enough gas for all of the UK to use for 2 generations of their own electricity demand. So it's a significant issue. So the chairman of BP is now the chairman of this company called Quadrilla. And if you go into our website, about 5 or 6 years ago, we wrote about this company and recommended it, and our subscribers made about 680% gain on this company. So I've spent a lot of time on the European shales, and it's not just the UK that have said, hey, shale's okay. You've seen Poland. You're going to see Germany come on board now, because the reality is these companies, these countries have such high cost of electricity. In America, we're lucky because we have such a low cost of electricity. Europe's the opposite. They're paying 2 to 3 times per MCF of what we're paying in North America. And for Europe to get back on its feet, it has to decrease their manufacturing costs, and a big cost of manufacturing is electricity. So this is the natural step that's happening across Europe.
Yeah, I definitely see that. You're definitely doing your due diligence. And I was wondering one thing. I see a major opportunity in natural gas infrastructure and water filtering companies, especially since so much shale gas is being unlocked. And I think in America, with oil, in the future being really expensive, natural gas vehicles and water filtering companies would be a good place to look if someone would to invest. Are you looking in? Are you giving that to your subscribers, or?
Yeah, about 2.5 years ago, we wrote a report on how to best play the shale sector, and the reality of where the markets are at is you have to be very careful with a lot of these startups. They might have a cool technology, but you remember, will the Halliburton or the Schlumbergers of the world take their technology and use it? So it has to be not just cost-effective, but it has to be practical. There's actually frack jobs now that don't use water, but instead use it gel. But the problem is it comes down to costs. The ingredients that are used in these frack jobs that Matt Damon or Gasland talks about being so bad for you, these are the same ingredients that are found under the average American sink. It's no different than what you wash your clothes with. So there's now been such a movement within the sector to regulate itself. There's been a president of a major energy service company drank a solution that they use for fracking. So if this guy is willing to drink the solution, he must be pretty confident in that it's not that bad for you. Now, moving forward into the water filtering or the water containing facilities, I think that's a great place to look at, but be careful that the financials make sense. Stay away from any of the early stage risky stories that are still theories, on a scientist's desk.
All right, and I actually want to get into another energy market that's been beaten down. And if you just ask me, I think this is a great contrarian play as the uranium market. And I was wondering, I think one thing that can actually put it out of its slump is the megaton megawatts. What are your views on uranium?
I think it is by far the most undervalued energy commodity in the energy sector, without a doubt. The spot price is trading for $43. It costs any conventional hard rock producer somewhere between, $60 a pound to produce. The ISR producers are somewhere around $30 to $40, and there's going to be a major change going on, not just with the HEU agreement ending at the end of 2013, but what people haven't talked about and the mainstream media has not figured out yet is Converdyne has shut down for upgrades and just basic maintenance. It's going to be shut down for another 12 to 15 months. Converdyne's where you take the U308 and you get your UF6, which is required by so many of these in the industry. Now, there's a shortage right now of UF6 in the sector, and even though everyone's thinking that this HEU agreement is going to increase the cost of uranium, which I think it will, the big bull market right now that is secretly going on, and all the smart money is piling in, is UF6. So moving forward, if you're looking to invest in this sector, which I think is a no-brainer and the Warren Buffett, solution to investing, you look at low-cost ISR producers in the U.S. and UF6. Those are the two bullish areas that we are looking at right now.
Is this for uranium?
Correct.
All right, just for our audience, just in case they don't know IR or US, can you just, what they stand for?
Sure. Well, ISR is in situ recovery. So basically what it is it's a hydrogenated water solution, basically like club soda, where they inject it into the rock underground. This club soda basically gets pregnated with uranium. They bring the club soda back to the water through pumps, and then they separate the water from the uranium. And that's ISR. It's been going on for over 40 years. It's the lowest cost mining method in uranium because you don't actually have to dig the rock up and then crush it and process it. And then UF6 is uranium hexafluoride.
Okay, great. So that is one treat people could get with this interview. And one last thing is Uranium 1 was just bought out today and taken private by the Russians, and I was wondering what you thought on that.
Sure, we've been writing now for 5 years that Putin and the agenda of the Russians is to corner the uranium market, which now, if you look back, there's Cameco, they tried to buy out Hathor, Rio Tinto came in, and then the Russians bought out Mantra, and now the remaining 46% of Uranium 1. Moving forward, this is very bullish for the market because Uranium 1 was one of the few publicly traded companies that investors could go to have exposure to uranium. So as we're getting closer and closer to this HEU agreement, when this agreement was done 20 years ago, Boris Yeltsin was on his knees and Russia was broke. They needed the help of the Americans. So when Jerry Grandy negotiated the deal, which took about 5 years to do, Russia was on its knees. And reality was there was no one else who could take that amount of HEU, highly enriched uranium, off the hands of the Russians. Today is a different situation. The Russians are not only going to go to the Americans, but they're going to now take that offer and compare it to what the Chinese are willing to pay for. And what's the most important thing about the uranium sector is when you look at, your natural gas, the price of natural gas makes a big difference to the actual output price of electricity because it's such a high cost for the commodity to generate electricity. The uranium cost, the change in price of uranium is insignificant to a nuclear generating electricity plant. The reason why is the price of uranium is irrelevant to one of these generators. If uranium doubled, it would not make a difference to the cost of electricity generation for these nuclear facilities. It makes up less than 4% of the cost. The big cost for these nuclear reactors is actually building these massive structures. Now that China is committed to going towards nuclear energy, the key for them is a secure, steady supply of U3O8. And whether they pay $75 or $200, it makes no difference to their cost of electricity. Whereas for natural gas, it makes a huge difference between $3 and $5 for the electricity generation. That is why the Chinese are going to be trying to make an agreement with Vladimir Putin very aggressively to lock in a high price for uranium.
All right. I definitely think that's very interesting. And it sounds like you say there's going to be a bidding war for uranium soon with China and the U.S.
Without a doubt.
Did I interpret that correct? All right. Great. So I did interpret that correctly. Okay.
And not just the Chinese. What about the Japanese who've had Fukushima and have stated that they need to bring the nuclear reactors back online? Now you have India And let's not forget that Saudi Arabia is going to be building 10 reactors also.
And, yeah, I definitely, I read about that. And not only that, am I right on this? So United Arab Emirates, I heard they signed a free trade deal with Australia for uranium.
Correct.
So, wow, talk about a contrarian demand dream.
Yep. It's a great sector to be in.
Yes, I definitely concur. So, I was wondering, just in case our audience wants to find out more about you, how can they do so?
Yeah, definitely. Go to the Casey Research website. We have many special reports. For your viewers, we'll offer a free report, which is offered at $29. Just type in on your frame caseyresearch.com/East Africa report, and they'll get the free reports, and you can see what we're doing here.
All right, great. Thanks for being on, and we'd love to have you back on in the future.
Oh, it's a pleasure.
All right.